Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's TGIM. Thank goodness it's Monday. And let's kill that volume too. It's a little too loud for me. Where's that volume at? There it is. Where is it at? There we go. Let's bring that down. That's better. I don't mind hearing me in the distance, but it can't be too loud. All right, let's get over to there's the euro. So let's just take a look at the dollar against the Swiss this morning and see what they're doing. It seems like what we've seen in the last couple of days is a flight to the dollar in just general. And at the same time, with this giant lockdown going on in China, oil is being used less. And so we've seen some buyers come off the world market, driving down the price of oil at the same time. You can see here the candle is, what? Is that up or down? I can't even tell. The opening is 93.27. Last is 93.36. Okay, so it's I guess it's a little unchanged but minus. That's what you have here. You can see we've been in the daily buy now. They're at the top end of the range. Let's just shrink this down real quick like so you can see that. You see they've been banging since the inflation event has started to develop. You can see we keep on climbing over the top end of the range of the last couple of years and just banging down. And then it seems to stall out at the 50 percentile, as you can see right there. And it hangs out in there and it comes back up again. So the range itself is being reestablished due to the inflation factor. That's pretty much the way to look at it. At least in my head, I look at it as an inflation factor. You can see over there, and let me just say this about that. The quote from somebody last 24 hours, I heard them say, "We really don't know a lot about quantitative easing and understanding the policy itself, what historical events occur from it, solely because it's never been done before." But as you can see here, just leaving that to aside, you can see here on the J4X, you see the white line piercing through the dashed line. You see our volume diminishing here, and at the same time we have these green hinky ASCII bars moving up. So that pressure is on there. The event of moving towards the dollar showing more strength. And again, I don't think it's anything more. Well, I'm hearing a couple of things. We're going to talk about that, and then we'll just keep on roaming through and waiting to see if anybody wants to ask a question. You don't even have to ask a question. Just throw a particular product on the chat line, and we'll go look at it. You don't even have to ask a question. Just go like EUR, USD, or anything, whatever currency or commodity you're interested in looking at. We'll look at. But one of the things that seems to be sticking out in my mind at the moment is, the world markets are kind of quiet. They're a little weak this morning. Asia was much more weaker than most because they're probably all locked down. That would be the reason. And oil is moving down because, again, they import about 5 or 6 million barrels a day, and they're probably importing less because they got people locked down. And then overall, the European markets are kind of flattish, up a little bit in France because of Macron's success moving into the next round, that type of thing. So consistency, but they're not really moving that big at the moment, and I don't expect them to. Also, the dollar has been running strong, more from talk that after the inflation is going to have more of an effect outside the United States than it will in the United States. And Europe is going to feel the pain of it more, and Asia will feel more of the pain of it compared to the United States. So money is moving towards the United States for that specific reason itself. JJ! Yeah, it was a good weekend. I was at a regatta for the whole weekend, and it was very, very enjoyable. So, and I feel my age. I feel tired. But it was a good weekend. Very good weekend. I hope you had a good weekend too. Here in America, we try to enjoy the weekends. It's tough, but we try. We try to use a couple days off. It's nice when the markets are closed. You don't have to think about them, but we do listen to what's going on and what people are thinking. We do reading. We look at charts, so forth and so on. So we're always focused in on the marketplace. But it's nice on the weekends not to have to be that involved. And we always hope it's peaceful and nothing crazy is going on at the same time. In other words, like the Ukraine situation where the Russians are attacking and killing children and just blowing things up, and none of that seems to make a lot of sense to me. But then in other ways, it makes a lot of sense, and that is that the Russian government wants to contain the idea of freedom and try to eliminate it. And with Ukraine being the largest country in Europe on their border, at the same time, they're trying to stop the growth of freedom. Freedom. You can see it in Poland and Czech Republic and Slovakia, Hungary, Bulgaria, and so forth, and Romania. All the freedom that's slowly evolving. Finland and all, they're just like and so Mr. and Mrs. Russia needs to stop that. They can't let people know that freedom actually works. Just look at America, 300 million people, and we rule the world financially. And it's not because we've done something wrong, it's because we've done something right. Okay, so yes, you can see there, they're moving towards the dollar. A little quiet again, as I said today. You can see it here on, let's just go over to Chicago Quant, our chart here, the proprietary, and then you can see how at the same time, we have an emulating or a public chart here. You can use J4X to try to act like our math. It has about a 68 to 71%. It fluctuates back and forth of correlation, which is pretty good compared to using like moving averages and MACDs and using stochastics wrong. Here we show you how to use stochastics right there. So, all right. Let's see what else we got going on. Like 01. JJ like 01. Roger Dodger. All right, let's jump over to the euro and see what the euro is up to this morning. And you can see there, it's perking its head up a little bit. It's a plus, moving against the dollar. You can see here our weekly is still in a sell right there. It's been that way for, all the way back to, is that the 11th? Can you see that? Let's try to get that back to the 11th. See it right there? Nope, still not there. Close. There we are. So back there in the 11th. We've been in that weekly sell up in here. It's just been a sloppy, slow grind down to the bottom end of the range. And when looking at the daily chart, as we talked about last week, talking about the daily quant versus the weekly quant. There's the weekly quant. This is the daily quant, and then this is a daily chart itself, looking at it through a Fibonacci range. And we can show you at times how to utilize the Fibonacci better. Let's see. Well said about the U.S. Leading role, Doc. Yeah, it's just, look, free people, free minds, free markets, less government. Government should be there to protect the people, not rule the people. We should rule the government. That's what our U.S. Constitution gives us the power to, and the Bill of Rights. And not many countries, or if any countries, really have that opportunity. But as time goes on, you can see, look at Poland. Poland is the 6th largest nation in Europe, and it is now battling with France as the number 2 industrial nation, constantly back and forth. And it's it's nowhere near the size of it. It's literally half the size of it. So that's what happens when you are allowed to have free markets and free people. You have growth and opportunity, and the government. We don't want governments picking winners and losers. We want the marketplace to pick winners and losers. In other words, if it's a good product, people will buy it. If it's a bad product, people will walk away from it. It's the way it's supposed to work. And that's my little heartthrob drumbeat about free markets and free people. Let's see. And you can see it, me doing dukascopy for the last decade basically now. You can see it. You can see that the young people from Latvia and Romania and Czech Republic and Bulgaria and everywhere, just Ukraine, just everywhere. They want to be part of the cowboy West of America. They want to be free to be. All right. You see it in Slovakia. You see it in Czech Republic. You see it all evolving. It's wonderful to see Hungary have that opportunity. But there used to be some great mathematical minds that came out of Hungary. We used to call them the Martians. They were so advanced in their concept of mathematics, We have a list of 6 or 7 great mathematicians, and then the communists come in and they stop people from thinking. One size fits all when it comes to socialism and communism, and we all know that does not work. And that's what we do here with the Electronic Trading Pit and our webinar. Everybody has a chance to put their opinion in, and you're not ridiculed for putting your opinion in. There's only a short answer or a long answer to the opinion, or if nothing at all, and we just show you a chart. It's free markets. AFA, hi there. How you doing this morning? Hope you had a nice weekend. All right. So let's put the euro up there on the J4X and see how she's looking this morning. Right there. You see we got a little green hinky going on right there. You can see the white line trying to turn up, and that volume has been dipping down. Let's see if the volume starts to turn there. And as you can see there, as we were talking about the other product or this product, since February, it's been in the weekly sell there on the euro. What do I think about the euro AUD? Well, let's go take a look at it and see what the charts have us tell us. That's what we always say here. We don't tell the markets what to do. The markets always tell us. So we go over to the euro AUD. There's euro Turkey. There's euro AUD right there. Let's put her up. Take a peek. Let's put it up on J4X at the same time so you can get a flavor of how the correlation works. Right there. Well, you can see right off on J4X, the white line is piercing up. We've got 3 days of green hinky ASCII bars. And let's see what the volume is telling us. And the volume is still dipping down, so there's a little weakness there. Over on the chart, you can see we went into the weekly sell back here in February, mid-February. And the product's been in a weekly sell since. And obviously, nothing goes straight in one direction. It vacillates or, chops along. It flows. Sometimes we get a nice little slice down hard, and then it chops around. And you can see here we were in the daily sell from here, and then it just rolled, and it joined into the weekly, and the pressure went on. You could see, let's put a zero line in there for you so you can see the zero line on the weekly better. Right there. There's the zero line. You can see how we were underneath there, and the pressure was on. And then you can see here we went into a daily buy right there after a little volatility signal. See that? And then we went back into a sell again, which gave you room to be short for these couple days. Now you can see we're in a daily buy for the last 3 days. You see that there? Let's put the zero line on the daily too for you. Right now. Whoop, whoop, whoop. There we go. And that's the sounds I like to make. And that's one of my favorite pet pigs. That was swirly. And that's what we're seeing right there with the what is that? That's the euro AUD. I hope that gives you a little insight to what's going on. And you can see here on J4X, you see that white line firm. You see that volume dipping down, and you can see the 3 days, as we said before, right there. I hope that helped you. Weekend great last week, plus 48 of my whole balance. Laugh out loud this week. Let's see, plus good. My leverage to 50. That's it. You don't want to get any more leverage than 50. In the 30s, 40s, and 50s, that's it. You stop at 50. You don't leverage any deeper than that. Live to fight another day. That's the way to go. And you can see here we're seeing a little pressure here over on Chicago Quant. What we'd like to see is, obviously you can see it's in the daily buy. Let's throw the 2 daily buys and then the daily sells that went into it since the last time we looked at it. So there's the daily buy there. Just make that green, like so. Oop, that didn't work. Let's try it again. Green, like that. And then we went into the sell again, right there. And then we went into the buy again, right there. So let's put that in. And that's where we are at the moment. Let's move that over one. Like so, there we are. There we go. So the weekly, you can see here, let's see if we can make this just a little bit bigger. Can we make this a little bit bigger? I think we can. just to give you a better feel for that weekly action we're seeing. You can see here the blue dashed line is trying to come up, so it's showing some strength, but we watch all three of these lines, and it's important for them to get through the zero line. So if this starts to turn up this week, the green here, bouncing off the time manifold here, the negative time manifold down here at the bottom, that's this mirror imaged, it's a standard deviation of our math, like the Bollinger Bands situation. If we see this thing bouncing off of that, that would give you a sign that there's some real strength kicking in. Right now, it's just short-lived, and so it's like what they refer to as like a dead cat bounce, dead cat bounce, where it just hits the ground, bounces just through the sheer mass and bounce, but it's not alive and it's not itself jumping, and so we'll see what that does. Now, we are in a daily buy, so right now the short term money is trying to come in, but we're not seeing it totally yet on the weekly basis. So we'll see how long that lasts. See if this starts to turn up going into this week, and we'll go from there. Yep, the charts love to tell you the story, and I just try to just point out this way. At some point, AFA, you'll look at a chart and you'll go, Doc, did you see that on your chart? And I'll go, no, I didn't. And you'll go, look at that. And I'll go, wow, that's a great idea. And so in many ways, my math and the charts are like art, like an artwork. You go into a museum, you have two people standing looking at a painting. One person sees one thing, another one sees something else, but they both see the beauty of it all. And so that's why, in the end, I always say it's the charts. We don't tell the market what to do. The market tells us. And that's why we say that, because that's the truth of it. And that's the whole name of the game. And then we show you the J4X chart right here, and it gives you a general idea of the same flavor. We're using the Fibonacci in this as I use it on my math. And that's why the white line likes to correlate with the green line right there. And the dashed line acts like the zero line right there. And so in the end, we're looking at a very artful thing. They are. They work really well. JJ likes the dead cat. Wow. Yeah, that's a physics thing. We talk about dead cat bounces. What happens is that the cat it was a New York thing, really. Actually, what it really came down, it was an old expression on the New York Stock Exchange because of New York City and the big tall buildings and the apartments up on the big tall buildings. And people would have their window open and the cat might fall out the window, up in a tall apartment, 20 stories up, and there's stories about cats actually surviving. They actually live and walk away from it, falling 20 stories, And then there's stories where a cat dies. And so when it hits the ground and it's alive, after it hits the ground, it starts to move and go. And that's a normal bounce. And then a dead cat bounce is where the cat dies from falling from those stories, and it just lays there. But it does bounce, like as if it's alive for a few seconds. And so that's why it's an old Wall Street expression out of New York because of the tall buildings. Hey Cal, how you doing? Good to see you. Hope you had a nice weekend. So that's the name of the game. We don't tell the markets what to do, they tell us. And our math just takes it apart and finds it. It shows us the discovery of it. And you can see here with the Hinky ASCII bars, the green matches up to our dot system here. Now it's only got a 68% correlation, but it's a lot better than zero. So what we always say is something's better than nothing. And so on J4X we have our some of the basic concepts I use, and then my math makes our chart, or my chart in particular, even more precise and more informative, accurate. I guess the best word is accurate. And that's how it works. And so by showing you a public chart like J4X and then putting some of the components that we can put on there, it gives you a fighting chance. And then we try to discover new ideas. Like we're looking at this volume, the ask and bid volume, and we notice that when it's weak, the product can be weak. And when it tries to bounce up, like right there, you can see the product tries to bounce up. Let's check out Euro Swiss. It sounds like a plan to me, Kel. Let's see what's going on. All right, let's put it up on J4X first to get a flavor of it. Right there. And you can see there the white line is moving up, and we just have one green hinky ASCII at the moment. Let's see what Chicago Quant has to say about the story. Let's go see. Euro Swiss. Euro Swiss. There's CAD Swiss. There's Cable Swiss. There it is right there. Euro Swiss. All right. And you can see here we did get into a buy one day. That was about it right there on Friday. You can see there the, is that right? Yeah. And you can see we had a volatility signal there. We are still in that sell from, let me move my desk out a little bit there, or the tray, that is. There it is. You can see here we're in a weekly sell. Can you see that? Let's tighten this up for you a little bit. There you go. You can see we're still in a weekly sell from here. From, let's move it over one more time for you, like so. There you go. So you can see we went into the weekly sell up in here, and it's been pretty much, went down, went up, went down, and pretty much locked right where we went into the weekly sell in here. It hasn't really changed the direction much. Let's see, what else can I say? Let's see, hey, there, do not forget to press the thumb up. Thumb up? I can do a thumb up. How do I do a thumb up? Let's see if I can find a thumb up. I'll do a thumb up. Where's a thumb up? Is that a thumb up? There we go. I'm coming in through the I'm watching you through MIMMR, not the Chicago Quant website this morning. And so you can see here the weekly, it went into a weekly buy last week. You can see that. That's something interesting. After all this pressure, we climbed into a weekly buy, and then sure enough, the blue line's breaking down. So it's not very good, and we're already forcing ourselves into a weekly sell. And let's put the daily in there for you. I think we can get a daily. Where is that? Right there, right? There you go. So there's your daily buy. We went into the daily buy. It is higher today still from it, but we are flirting with the daily sell already, and we're playing with the weekly sell right there at the same time. So they pushed it into the weekly buy last week, and it doesn't seem to be. We'll see how it plays out. See if it's the charts in the end will tell us what's going on. And at the same time, you can see right here, we are flirting with the daily sell as we speak. It's through the zero line right here. You see that right there. And now you got the weekly and the daily, so we try not to fight these things. Remember, we don't trade the trade, we trade to make money. That's the name of the game. All right, now from the Euro Swiss, let's see what else we got to say about that. I'm sure we have something to say. I guess that's about it. Unless someone wants to see something else, we'll just move back to the old stuff. And believe me, I love stopping and looking at new things because, I think I was saying to Robin about wanting to write an article about the British pound yen. I mean, we caught that. That was so beautiful. We wrote an article about it, and would you believe the company was a bar chart or something, didn't take it. So I talked to Janos, and I said, Janos, how about if I put articles in on Dukascopy instead? And he said, sure. I said, okay, cool. So, when we see a really great trade in the 90th percentile of a win, we're going to put an article in there for you, ahead of time so you can jump on it. Let's see. So from there, we're going to jump over to the cable. Let's see what the cable's doing this morning. There's the cable. And let's put it up on J4X right there. There we are. You see a lot of red on those hinkies. And you can see the white line's trying to do a little piercing here. And you see the volume has been drifting on the downside, so that's why you see that long pressure there. And over here on the, let's tighten that up so you can see more. Now this has the Bollinger Bands on it because we use that as an example, how Bollinger is behind us, not ahead of us. And you can see right here, we went into the weekly sell up in here, and it's kind of been, up and down, and then breaking down. And then you can see, look at the dailies. The dailies have been really, really a battle. You can really see that battle that's been going on right there. Where we go into a buy, a little strength there, and it dies. In this case here, we're in the weekly sell from all the way back in here. And you can see we go into a buy here. It takes off, but you can't get this weekly to lift. It tries, even the blue dash line, the Super 5 side of it, tries to lift it. But look at it this morning. You got some real buying trying to get in there right now. You got the weekly ripping through. And it would be nice to see us, we're at the bottom end of the range. Let's see if we can tighten it up and just show you how much we're in the bottom end of the range. We haven't been down there since almost 2019. So basically right there in 2000, it's the summer of 2020. We're going into the summer of 2022 now. So that was the range. It drifted underneath there a little bit. That was the Brexit stuff that finally resolved itself. And so we keep on expecting cable to do better. We always do. We always think the cable has much more greater potential. See, oh, hey, Robin. I love that. That's a great one, Robin. Ours is not to wonder why. Ours is just to sell and buy. That's right. We trade to make money. Excellent. I love that one. That's a good one, Robin. So, that's the answer to it all in the end. Is that cable in my head? Well, at the trading side of it, I totally agree with you there. But cable, has great potential. It's part of the Commonwealth. It's got 2 billion people in it. China is is 1 billion. India is in the Commonwealth. It's got 1 billion. So I don't understand, if they're so excited about China, how come they're not super excited about the Commonwealth? The Commonwealth has great potential, especially now that they've moved away from the socialist stuff, from the European Union. So it just kind of says to me that there's great potential there, and matter of fact, I saw an interesting article. I'm deviating a little bit, but I saw this interesting article. I think it was Friday or Saturday. It might have been Saturday. It was Saturday, and it talked about the how I guess a lot of European gold is in England, and so they were just talking about how that was part of the Brexit fight, if they were going to move that gold back to Brussels. So, Robin, yes, definitely. He's so right. I agree with him. Well, you're talking about a person that's been, he traded. Can you imagine having a career where at one time you were trading eggs, chicken eggs on an exchange floor, a major exchange floor, and Robin went from there to when they invented. Let me just say this again. Then Robin went from there when they invented the S&P 500 futures contract and traded S&P 500s and literally made the first trade in the trading pit, setting the price. Talk about experience. Doc, former BitMEX CEO predicts coming crypto carnage. Basically, it's down today and it's been weak. We'll put your chart up there. I'll show you, JJ. Basically, his argument is based on the assumption that cryptos and NASDAQ 100 will remain positive correlated. Yeah, I agree with that. We're learning about the cryptos. One thing, look, I think the cryptos, first of all, big supporter of cryptos. Janos and I talked about it last week here about Wilcox. Wilcox used to be a presenter here. He jumped into the crypto universe in the early parts of it. And let's put Bitcoin up there right now so you can see it as we speak. And you can see here, we've been in a daily sell from here. We got the blue line on Friday through the zero line, and it's still in a weekly buy. This is where it went into the weekly buy, down in here in the 36s. Ran up to about 48, and now we're moving back down again. And you can see we've been in a daily sell since the 40s, the 47, 48 area. 40, yeah, not 46, is it? Is that 46 too? That's 45 and change. That day it touched 47,870. Pushed it into a sell, and you can see here we're at 41 now. So you can see here we've been in weakness. The weekly, let's see if we can get the weekly a little bit closer for you to see. Like so. There you go. You can see the weekly's been in a buy since the 35s or 34s, that type of thing. It went into the weekly buy down in here, 37s. 38ths, I guess, something like that. And you can see, it was in a daily buy there, and it caught that whole ride, and it caught this whole ride, because you're in a weekly buy, so it's you're free to take the long side of it. And this gave you the warning of all this buku money. It's Vietnamese for a lot. Buku, a lot of money being made, and then you can see the weakness. It broke down right in there. Let's see, what else can we say about any of that? So yeah, when looking at the NASDAQ 100 or on Dukascopy, and let's show you what it looks like on Dukascopy too. Here's the Bitcoin on Dukascopy. Right there. You see all the red hinkies matching up to our dots there. See that right there? And you can see the white line underneath. You can see the volume diminishing, going down, showing that pressure. And correlating it with the NASDAQ 100, which does make sense because the NASDAQ is very sensitive too, just like the Bitcoin is, to interest rate factor. And we're learning. We're going to school. We are going to school. We're learning about the cryptos. We did a webinar on them a while back, and we talked about the idea that what you're investing in when you're investing in the cryptos is you're investing away from the central banks. It's not the currency as much as the central banks itself you're moving away from, and the inflating and so forth. Now, we always assumed right from the beginning that cryptos would defend against inflation, but we've not really seen that. When inflation really became, or let's say it this way, when inflation really showed us like 9 months ago that it was we were going to see inflation, we had Bitcoin trading in the the $70,000 area. Instead of it going to say 100,000, it went down to 35,000. Okay, so in many ways, it functions as an independent the way gold does. In other words, when you look at gold, 5 years ago or 10 years ago or 15 years ago, obviously you're higher. You're doing all right. But on a day-to-day or week-to-week situation, it doesn't always represent the action of the fundamentals in front of us. In other words, it doesn't represent every little squiggle and turn and twist. Okay? And so, yeah, I can see, JJ, they look at the NASDAQ the same way because they're both very sensitive. Oh, JJ says, and he thinks that the NASDAQ will go down, part of the reason inflation. Yes, and cost, the amount. Basically, the NASDAQ 100 or the Tech 100, let's put that up on J4X also. Right here. That is very interest sensitive because they use a lot of cash. They're very cash intense. So they have to borrow, and that increases their costs, which reduces their earnings. Earnings make stocks. When earnings go up, stocks go up in value, and when earnings go down, they go down in value. And so you can see here on the Tech 100 of Dukascopy, you see the red hinkies. See that right there? And you can see the pressure on it with the white line. You can see the volume drifting hard, too, right there. And then we take a look at it over here on the Chicago Quant. You're going to see it matches up. You see the two of them joining in together. Same situation. We're in that daily sell since, see right there. You can see the daily sell from this top in here. Just a short-term view. You can see we've been in the weekly buy, and it's trying to break down, but it's not doing that good a job about it, solely because, again, there's a flight to safety of return. So they're running to the United States to be long these things at the same time. And so, yeah, they do have a characteristic. Robin's mentioning about Mrs. Yellen, the former Fed chair, who's now head of the finance ministry, or what we call the Treasury here in the United States. And Yellen said that it's time to regulate Bitcoins. Yeah, I don't know how well they're going to get away with that. There's laws in America, and as much as Gefkin, head of the Securities Exchange Commission, wants to regulate them, I don't think they're going to be able to. Congress is probably not going to pass anything, so I don't see anything happening there at the moment. We'll see, but they'll scare it and so forth. But you can see here, the Nasdaq 100 is feeling the pressure, but they're not taking out this low of mid-March, right there. You see that? See, and at the same time, Let's take a look at Bitcoin on J4X so we can have them both up on the screen at the same time. And there's there, and you don't see them taking out the low of, where's the March there? There's March 20th. There's the March, that's that March low there. They're not taking it out yet either. You can see that there. It's still holding up. And we're at the bottom end of the range, so you can see there's some pressure to start bouncing again. So I'm not too concerned. There was a big conference in Florida. It was very positive. I think that cryptos have great value, because central banks are kind of wacky. They really are. They're doing some really strange things that don't exactly make a lot of financial sense. So, moving away from them is fine. You're not going to be able to. There's not the depth, There's not enough liquidity in the cryptos to give you what you would like. But it's, it slowly builds as time goes on, year in, year out, decade in, decade out. They're another tool. They're a financial tool to a quantitative era. If there's going to be QE, then there should be crypto. That's pretty much what it really comes down to. It's very simple. All right. Let's see. Where do we go from there? But thank you for bringing up the cryptos. It's well worth looking at, and we watch it every day. All right. Now, where were we? Oh, we're going to jump over to the Euro Turkish Lira. Let's take a look at that. Right there. There's the Euro Turkish Lira. Let's tighten it up a little bit so you can get a better visual of it. There we go. We'll put it up on J4X. Right there. You can see the same thing going on. Lots of red, just like we have right here. We're at the top end of the range. You can see that right there. We have it defined in a big black box. Maybe we should make the box red or something. I don't know. Yellow? Maybe we should make it yellow. Something really identifiable. Like that. There we go. So you can see we've been staying in that range since the beginning when they started to issue puts. They give out put options. It's almost like a binary they put out. The Turkish government, you buy the currency, they give you puts. Silver? Sure. Let's see what's going on in silver. I saw it up, I think, in the charts this morning. Let's see, where is it at? Right there. There's silver. Oh, yeah, look at that spike. We closed in a daily buy yesterday on Friday. You can see we have a volatility signal the day before that. And we went into a weekly sell. How wonderful. One of those tricky days there. So one thing's for sure, you're not short for this whole move. You're just not catching it unless you have binaries or options on. Option calls on. Or you own the put and own the contract, the spot, at the same time. And then you're a winner, chicken dinner on all three of those. But not naked. Because, we're in that weekly sell. We don't know if this is just short-lived or not. And we don't want anybody to, get involved in something that we don't see, a very high percentile of win. So, let's see. What else can we say about that? Let's put it over on J4X, too. There's a silver. Same situation. 2 days with green. You see the volume is trying to stall out. You see it tried to lift and failed, and now you can see it's trying to lift up there. So, and that's a good example of, we trade to make money, we don't trade to trade. Because if you follow the clean tools how to do it, if you're buying the spot and buying some puts, or if you're buying the binary, or for an up move, or you're buying the calls for an up move, like turning it into a binary, then obviously no problem. But if you're just naked long, we say no, be careful, because you're in a weekly sell, so we don't know. In this case here, you can see it just exploded up, and that's the way it goes. So you make a little, but the idea is not to lose. All right, from there, let's see, where were we? We were looking at Turkish Lira, so we know that the Turkish Lira is, let me just see it one more time. I just want to see Turkish Lira real quick. Turkish Lira is flirting. Oh, it's in the daily sell. That's what it is. Let's widen that out too. So it's been in the daily sells from here, and you can see all that red. You can see we're flirting with a weekly sell, but pretty quiet, staying inside its big range here that we've been watching for a while now. All right, from there we go to the Canadian, and we look at oil, and we look at gold and so forth. So let's do that. Let's go to CAD. There's CAD. You can see the CAD's been in the daily. CAD's been in the daily buy for a couple of days here now. The weekly's still in that sell from here, which has not been too exciting one way or the other. Let's see how it looks up on J4X. Right there. You can see same situation. Lots of greens here in the hinky. You can see the white line above the dashed. And you can see the volume itself is kind of chill. Kind of sideways up a little bit, sideways down. And that's probably because we're in that weekly sell right there. All right. Now from there, what we like to do is we look at the energy sector. Canada is a big oil producer for the amount of population they have. So let's take a look at crude oil. Right there. And right there. And we talked about that at the beginning of the webinar. With the lockdown in China, they're not buying as much oil at the moment, or using it, let's put it that way. And so it's, think about that. Government can lock down the population. We know lockdowns do not work with COVID. We know it. It's a fact. It's a science fact. But some of these dictatorial governments, our dictatorial Democrats here, tried to use it to stop people from doing things. Because when they slow society down, they get more power. That's what it comes down to. But in the end result is that, so they've locked down 26 million people in the productive side of the society, so it's slowing down their consumption of oil, which may be the objective of lowering the price of oil. And they don't care if they literally sometimes lock the doors on people where they're not allowed out the door. They're imprisoned. And they promise to bring them food. Sometimes they forget to bring the food. That's why we talk about it. Free people, free markets, free minds. All right, so you can see here oil is moving down in a slow drift, not taking out that low right there yet. And you can see it here on the Canadian. It's moving up, which is kind of odd. Usually Canadian finds a way to go down when, not odd, I'm sorry, it's the other way around. When oil is going down in value, Canadian goes up against the dollar. In other words, it loses money against it. So that's accurate at the moment. But overall, I don't see anything too scary. I think that oil is just a big triangle just hanging out, and they're just trying to resolve how to deal with this whole situation with Mr. Putin and his terrorism against Ukraine. All right. From there, we take a look at the metals complex. Let's take a look at gold. Let's see, right there, and there's Canadian. So we go like this. Let's look at gold, because Canada is a very big producer in silver and gold. And there's the gold, and you can see gold's doing the same exact thing. And we closed in a daily buy on Friday, and we did the same thing. We closed in a weekly sell. That's the math. We just follow it, traders. You see the volatility signal that kicked out on Thursday, and we'll see how they lift it up or if they don't. Just let them play their thing out. Now, let's take a look at the South African Rand. That's what we do, is we jump to the South African Rand, because if gold is running up, this should be heading down, and sure enough, it is. Look at that nice quick spike here on J4X. That's the South African Rand. It's putting some pressure on it. It should gain against the dollar, and that's what it's doing as we speak. Let's check it out on Chicago Quant. There it is right there, ZAR. You see doing the same exact thing, and we closed in a daily sell on Friday too, right there. Let's put that line in there. Come on, line, you can go in there. There we go. No, not there. I didn't want it there. I want it there. There we go. We'll get rid of that one. And you can see the pressure on that, which makes sense. So it was reading it on Friday. It knew that the money was going to come in on gold and silver, and sure enough it did. And we're still in that weekly sell now for a while. I think it's like March or February or something like that. No, it's December. So we've been in a weekly sell. Let's see if we can show that to you a little bit better. Wow, we need to tighten it up even more. How about that? There we go. You can see we've been in that weekly sell since back in here in December, back in last year. So you can see the pressure on there, and it's going from the mid 15, 16 area down to the mid 14 area. Nice and nicer. Now, from there we will look at a quick look at the currency we will not name, like Baltimore in Harry Potter. And you can see there they spiked it up and are bringing it down, and it looks like it's pushing into the sell, and you can see it's been in the weekly sell since here. This is where they linked oil and gold to their currency, which makes sense. S&Ps, euro, cable, anything that the high percentage of the math comes out and says jump on. I try to let the math tell us, but if I'm doing like an intraday, it's more than likely the euro and the S&Ps. They're like the best for intraday stuff. But I try to steer clear from the intraday, just because I do too many things. I'm doing way other things like helping my son do this or helping my friend do that. Or now farming season's coming on. We're checking out plants, making sure the plants are happy, stuff like that. But yeah, S&Ps and the euro are probably some of the best. Once in a while, I'll trade the bonds, the bond market, because it's a very liquid place. 30-year in particular. What else? That's about it, really. And then position-wise, it could be a stock. It could be, it comes down to the math. If something jumps out and says, hey, this looks like it's got a 90-some-odd percentile that's going to go running, I'll jump on it using options and the product itself, marrying one or the other together, or just options, or binaries, using the binaries. I turn options into binaries. So, all right. Glad you asked. Let's see where we go from here. Let's jump over to from the currency we will not name to the yen. And there's the yen. Look at that, taking out the 6-year high now. And you can see we're in a daily buy since here. And we've been in a weekly buy since here. Let's see what it looks like over on J4X. Right there. Okay, same situation. Look at all that green on J4X. Now, it's interesting. It topped out here, gave you that weakness. They put a nice low in there. Volume dropped down, and now it's trying to bottom in here, and you're getting your lift with all the green hinky-ashkies and the white line joining in days ahead of time. And I hope, that when showing the two charts, it shows you can have a good tool that doesn't cost you much. You can use the J4X and, be in the hunt. You can be better than the average and experienced trader. If they're not using the right tool, you become the experienced trader. And that's the whole key to the whole thing, is that showing you that you can have a chart that will give you a correlation to about almost 70% of our math is not bad. It bounces between 68 and 71% most of the time. And so you tune into the webinar, you can see our charts live, and at the same time you can generate your own using the tools the way we use the tools. AFA says, cool, I found out binaries and dukascopy, just like daily, they cut off before midnight. Ah, okay. Yeah. So then you have to build your own when you want to go further out. And if you're trying to trade some type of fundamental or something short term, you can put the binary on through dukascopy, that type of thing. That makes sense. All right. And who knows, they may customize stuff as time goes on if you ask for it. You just never know. Just time tells, In these times, it's very tough, We're in a very... Look, quantitative easing has really hurt every area. And I can say this, that the currencies are the best to survive the nastiness of quantitative easing. But still, it has interfered in every product everywhere. It's very hard for a brokerage house to make a market because the quantitative easing, the governments, they're not battling J.P. Morgan. They're not battling Deutsche Bank. They're not battling, I don't know who else is big. Trying to remember some of the European companies. Some of the brokerage houses. They're not battling them. They're not battling. They're battling with the Federal Reserve and the central bank. They have more money than anybody can imagine. They can print it. So it's very hard to make a market against an entity like that that's making, doing what it wants to do, and that's it. So you're not fighting with money managers and you're not fighting with trading desks. You're fighting with the central banks. That's really hard to make markets against them. It says, cool. Any binaries with longer expirations to propose? I don't at the moment, no. But, I always recommend binaries on some level. Or marrying a binary with the future for the day, if needed, that type of thing. I like a longer term. I like to try it. That's why we do daily and weekly charts more. We can show you intraday charts, but I'd like I have the same success rate with intraday as I do with daily and weeklies, but I don't want to push people into doing that. They have to do it themselves, in the sense of they want to see an intraday. You want to see an intraday? I'll gladly throw it up there for you. But it's wiser to try to trade the longer position with time. But it's not to say that intraday trading is bad. Intraday trading is fine. Just build the tools, use your tools to do it. And I show you here with J4X and so forth. And you can build a better tool. Just using the parameters we use here on J4X on a daily and weekly, you can do it for an intraday. All right, from there we jump over to, let's see where we're at. That's the yen. We'll do this last currency that we follow, and that's we come back to North America. We go to the Mexican peso against the dollar, right there. You see it's banging against the bottom end of the range. We have widened that range a little bit. We've readjusted it for the action and the inflation. And let's put it up on J4X right there. You can see, it's catching this little bounce we had right here. Let's put that daily buy in there. Right there. So you can see we went into the sell here, and it finally, drifted down, went down. We were in the weekly sell at the same time for this whole move right here and there. So that worked out well because we had a daily buy that kept you out of trouble. Right there kept you out of trouble, and right there kept you out of trouble. And you might have actually made some money on a bad move that worked, And then you can see here now we're in the daily buy again, protecting you from giving away all this money that you made there. And you can see we're still down in the south side here, down at the bottom end of the range, working the Mexican peso there. Now from there we jump over to the metals complex again and the oil complex. So let's see, let's check out, we've seen gold and silver on this. There's the gold again, showing the strength. I'm going to show it to you over here. Right there. You see that strength that's kicking in. We've shown you silver spiking just as well. Let's put that up there again. At the highs of the day. Back to that, now we thought the 24.55 was some type of support. And you see we drifted underneath it. We got into the 30s. But it's climbed right back up again. So there might be a little bit more excitement. I'm not sure what's chasing the market, but I'm sure a story will come out that matches it. but the math has already smelled it coming a couple days ago. You got that volatility signal right there, and in the green, and over on J4X, you see the same thing. We started to get the green 3 days ago, and the white line. Now, if we start to see this volume try to really perk up like it did there, maybe there's something more to it. We'll see what they try to do. Any binaries with longer expirations? Oh, okay, I read that right. All right. So, let's see. Let's go over to the copper. See what copper's doing right there. It's been showing a little weakness in here, but nothing major. Let's see what it looks like over here. Yeah, it did the same thing as gold and silver. Pushed itself into a sell on Friday, and here we are already dancing through the weekly. But the daily has not giving us anything. It's at the lows of the week already. And that's the pressure we see here, but not really going anywhere. The metals complex is kind of neutral. I'd imagine this pressure is because of China locking down, which slows down their industrial activity. That probably is the answer to that whole thing there. All right. From there, we'll jump over to the oil complex, and we'll take a look at. Let's do this. Let's throw North Sea Brent up there. I want to see what Brent's doing. Yeah, Brent's come down from the 140s to or 130s down to under a century, under $100 right there now. And the same thing with U.S. oil. We're like at 93 or something like that right there. 94.61 now with a low of 92.93. So the pressure is pushing down. We closed in a weekly sell there too. Let's see if they, like I said, I think at best it'll probably hang out right at pre-war prices in the 80s. I don't really see it doing anything more than that. There's a lot of demand for the product, and locking. China's trying to help Russia out by locking down the society so that they consume less. It's horrible how they punish the people. What else can we say about the oil? I guess that's about it. Nat gas. Let's see what natural gas is doing. Here's American natural gas. It was firm. Yeah, it's at the highs. That pressure's on. We've been in that weekly buy since way back here. See it right there? Pressure's been on since the $4 area, and now we're up in the we're a pretty high area. 6.5, 6.60. Now I wonder what Europe. We've been watching Europe trade oil between 26, the same quantity as us, per cubic foot, and up into the 28. So let's see what natural gas is doing in Europe this morning. In euro terms, right there. 29 now. Pushing up to that 30 area. You see lots of green. You see they're at the top end of the range here on the J4X, and you can see the volume is not really picking up. So I don't know if they have anything more they can do than what they've already done. All right, traders, we're done for the day. All we have to do is come up with a title. And we are going to get out of here for the U.S. Open now. So, happy trails to you until we meet again, which will be tomorrow, traders. Happy trails to you, to all my Dukascopy trading friends. All right, traders, later. Be safe, be smart out there. Doc, over and out.